Welcome to our deep dive into Happy Forgings Ltd. We've got a pretty hefty stack of reports, filings, presentations, all about this leading Indian manufacturer. It can be tough to wade through all the financial jargon, but don't worry, that's why we're here. We're going to cut through it all and get to what really matters to you.
You sure picked an interesting one. Happy Forgings is really making a name for themselves in the heavy machinery and high-precision parts world.
Yeah, they just released their unaudited results for the quarter and half year ending September 30th, 2024. Standalone results, consolidated results, a review from their auditor, even a cash flow statement. And they've helpfully put together an investor presentation too, highlighting all the key points.
Well, from what I'm seeing, Happy Forgings is reporting what they call steady, broad-based improvements, essentially positive trends across revenue, gross profit, EBITDA, and PAT.
Okay, but hold on. What does steady, broad-based improvement actually mean for someone who's not, a financial expert?
Imagine you're running a lemonade stand, and every day you're selling more lemonade, keeping your costs down, A&D making more profit. That's steady, broad-based improvement in a nutshell.
I like that analogy. And they're doing all this despite some headwinds in their key industries, like, commercial vehicles and industrial manufacturing, especially when it comes to exports. It's a tough market out there.
Exactly. Which is what makes their results even more impressive. Even with some of those challenges, they're still reporting year-over-year revenue growth of 6.1% for Q2 and 6.4% for the first half of the fiscal year. Now, there's a little asterisk next to those numbers because of what we'll talk about later as the air freight anomaly.
Air freight anomaly. Okay, I'm intrigued. But even with that asterisk, those growth numbers are still pretty strong, right?
Absolutely. They're not just riding a wave here. They're actively steering the ship to get these kind of results.
And speaking of strong results, their profitability really stands out. Their EBITDA is up almost 15% in Q2, and their PAT jumped nearly 24%.
Yeah, that highlights how they're not just squeezing lemons, they're finding ways to get more juice out of each one. Now might be a good time to unpack that air freight anomaly we mentioned.
Tell me more. What happened? Did they ship their product by private jet or something?
Not quite, but it does involve a single order that had some unusual shipping costs. This one order actually increased their H1 revenue by about Rs 13 crores, EBITDA by Rs 9 crores, and PAT by Rs 7 crores. And just for Q2, it added Rs 3 crores to revenue, Rs 2 crores to EBITDA, and Rs 1 crores to PAT.
Wow, that's a pretty big swing for just one order.
It shows how important it is to understand the story behind the numbers. It's not just about the raw figures, it's also about the context that makes them meaningful.
Absolutely. Now, going back to their performance, I noticed they're increasing their realizations even though steel prices have dipped.
That's a great point. They've achieved a 3.6% increase in realizations, reaching Rs 253 per kilogram in Q2. And they're doing this by strategically shifting their product mix towards higher quality, more complex components.
Okay, that's a strategy I can get behind. But you mentioned earlier that some of their key sectors are slowing down. So how are they pulling off this financial magic show?
Well, it's interesting. While some parts of their business, like commercial vehicles and industrial sectors, are facing a slowdown both domestically A&D and export markets, they're actually outperforming industry growth in most of their segments.
Wait, so while everyone else is struggling, they're somehow selling more. How?
Well, it seems they're doing two things really well. First, they're expanding their market share within their existing customer base. And second, they're winning over new customers.
So they're not just weathering the storm, they're actually turning it to their advantage.
You got it. And that proactiveness is also reflected in their strong balance sheet and focus on capital efficiency. Their net debt to EBITDA ratio is decreasing, and they're funding most of their capital expenditures through internal accruals.
Hold on, can you explain what funding capital expenditures through internal accruals means? Like in simple terms.
It means they're using their profits to invest in things like new equipment or expansion instead of borrowing money. It's a sign of a healthy business.
Okay, so they're financially savvy, operationally efficient, and riding this wave of success. But are they content with just staying where they are, or are they thinking bigger?
Well, that's where things get really exciting. They're not just resting on their laurels, they're making strategic investments for the future, particularly in capacity expansion. They're even installing a brand new 14,000-ton press line, which will be only the second of its kind in India.
A 14,000-ton press line. That sounds massive.
It is. This new press line will allow them to make heavier and more complex parts, opening up all sorts of new possibilities.
So they're not just thinking about selling more, they're thinking about creating a whole new range of products.
Exactly. And that's not all. They're also transitioning from being primarily a forging-led business, to becoming a major manufacturer of machined components in India.
Okay, I'm not an engineer. Can you explain the difference between forging and machining and why this shift is important?
Think of forging as shaping the basic material you're hammering and pressing it into a specific form. Machining is more like taking that shaped material and using specialized tools to create intricate designs, adding more value.
So they're leveling up their skills and offerings.
That's right. And this move to machining is a clear sign that they're ambitious and not afraid of new challenges.
This is fascinating. They're financially smart, operationally efficient, and not afraid to invest in their future. But it's not all about growth and profits, right? What about their commitment to sustainability?
That's a crucial question these days. And the good news is Happy Forgings is actively pursuing some pretty ambitious environmental sustainability goals.
I'm all ears. What are they doing?
For one, they're aiming to cut their Scope 1 and Scope 2 carbon emissions in half by 2030. And by 2025, they want to recycle 100% of their wastewater.
Wow, those are some big goals. Are they actually making progress, though, or just talking about it?
They're definitely walking the walk. They've already made strides like installing solar power plants at their facilities, implementing energy efficiency measures, and adopting eco-friendly technologies.
It's great to see a company putting their money where their mouth is. They're
Yeah.
pushing it financially, they're expanding strategically, and indeed, they're committed to sustainability.
Yeah.
But we've only just scratched the surface. There's still so much more to explore.
You're right. We've got a lot more ground to cover in this deep dive.
So stay tuned. We'll be right back to break down all those details. All right, we're back and ready to dig deeper into these Happy Forgings financials. We've established that they're doing really well overall, but let's zoom in on their different business segments. You mentioned that the market is a bit shaky right now, especially for things like commercial vehicles and industrial products.
Yeah, there are definitely some headwinds out there, both domestically and when it comes to exports. But Happy Forgings seems to be navigating these challenges better than many of their competitors.
Okay, so how are they pulling that off?
Well, remember that air freight situation we talked about earlier? It did skew the numbers a bit, but even when we adjust for that, we see a clear strategic shift in their product mix. They're really focusing on higher value products, and it seems to be working.
So they're moving away from basic lemonade and offering more like, those fancy artisanal lemon-infused drinks.
Exactly. Take a look at their commercial vehicle segment, for instance. In the first half of FY24, revenue from commercial vehicles was about 39% of their total. Now in the first half of FY25, it's up to 41%.
So even though that market is slowing down, they're actually increasing their share of the pie. Pretty impressive.
It is. And it's not just about maintaining their position. They're actively gaining market share. They've grown their business with existing customers and attracted new ones. That's a sign of a company that's doing something right.
Their investor presentation also mentioned their transition from being mostly a forging company to becoming a major player in machined components. Is that part of their strategy to deal with the industry slowdown and come out on top?
Definitely. By moving into machining, they're basically moving up the value chain. They're not just shaping raw materials, they're creating more complex and specialized components.
So they're like those lemon artisans we were talking about, crafting those really intricate designs.
Precisely. And that usually translates into better profit margins as well.
Makes sense. They're being strategic and proactive. And speaking of smart moves, their track record is pretty impressive. They've consistently grown their revenue, EBITDA, and PAT over the past few years, even when times were tough.
Their ROE and ROC are also really strong, indicating they're using their capital effectively to generate solid returns.
And remember how they're funding a lot of their growth through internal accruals. That points to some pretty strong financial discipline.
It shows they're not just focused on growth at any cost. They're making sure the business is fundamentally sound. But it's not all about the numbers, is it? We also need to consider their commitment to sustainability.
Right. What are your thoughts on their ESG initiatives?
Well, their goals to reduce carbon emissions and achieve 100% wastewater recycling are very ambitious and very commendable. They're taking concrete steps to minimize their impact on the environment.
It's encouraging to see a company that's not just talking the talk, but actually walking the walk when it comes to sustainability. So we've got strong financial performance, strategic expansion, operational efficiency, and a commitment to sustainability.
They seem to have found a pretty good balance.
But there's one more ingredient we haven't talked about yet, their governance structure.
Oh, right. Good point. What stands out to you?
Well, they have a very diverse board, for one thing, with strong representation from independent directors, including 2 women.
Diversity in leadership is so important for bringing in different perspectives and making better decisions.
Absolutely. But what about their actual practices? Are they really committed to good governance or just checking boxes?
Their high board meeting attendance and the fact that many key committees are led by independent directors suggests they're pretty serious about it.
That's good to hear. And on a similar note, their investor presentation highlighted their investments in corporate social responsibility, or CSR. It looks like they're supporting a variety of causes, like healthcare education, vocational training, even animal welfare.
It's great to see a company that's not just focused on profits, but also on giving back to the community.
It's clear they're going beyond just shareholder value. They're trying to build a truly sustainable and ethical business.
Agreed. It's been a very insightful deep dive so far.
Definitely. But I think we need a moment to process all this information. When we come back, we'll wrap up with some key takeaways and leave you with some food for thought. All right, we've made it to the final squeeze of our deep dive into Happy Forgings Ltd. We've covered a lot of ground, their financials, their strategy, sustainability, even their governance. They're definitely a company I'll be keeping an eye on.
Me too. It's really impressive how they're not just surviving, but thriving even when the market is throwing them curveballs.
So let's bring it all back to our listener. Why should all of this matter to you? Why could you care about what Happy Forgings is doing?
Well, first off, it's a great example of how a company can not only stay afloat, but really succeed even in a tough environment. Their story is full of valuable lessons about strategic thinking, operational excellence, and planning for the long term.
It shows that you don't have to be a massive corporation to make a real impact. And for anyone interested in Indian manufacturing, Happy Forgings is a perfect example of how companies are stepping onto the global stage.
Absolutely. They're proving that Indian companies can compete with the very best, delivering quality products while maintaining high ethical and sustainability standards.
And for investors, their journey offers some really interesting insights. Their track record of growth, strong profitability, and smart use of capital makes them a pretty attractive prospect.
Yeah, and their focus on ESG factors is a big plus for investors who prioritize sustainability and responsible business practices.
So it seems like they've found that sweet spot of being both profitable and doing good in the world. If you had to choose just one key takeaway from this whole deep dive, what would it be?
I think the biggest lesson here is that success isn't about waiting for the perfect moment. It's about creating your own opportunities, making strategic decisions, and building a resilient business. Happy Forgings embodies that perfectly.
Couldn't agree more. But before we wrap up, I have one final thought for our listener to ponder. We've talked about how Happy Forgings is well positioned for growth. But the Indian economy is always changing. So the question is, as India continues to grow and the demand for high-quality manufacturing increases, how will Happy Forgings leverage its strengths to capture even more of the global market?
Now, that's something to think about. It'll be very interesting to see where they go from here.
Well, thank you for joining us on this deep dive into Happy Forgings Ltd. We'll see you next time for another in-depth look at a company making waves in the business world.